Hey everyone, Steve here from 11ish, a channel where we talk about lucrative investment strategies and opportunities based on the requests from the 11ish collective. Ever since COVID has hit the fan, this K-shaped growth curve, the stocks that promote remote interactivity or productivity, it has been incredible, if not insane. But everybody else essentially got fajita. Regardless of whether your stock actually has anything to do with COVID or suffered from COVID, your stock probably got shafted because everyone pulled their money out to put their money into stocks that has anything to do with remote interactivity and productivity. To optimize your investments, right now it still makes sense for you to chase after the stocks that benefits from this immediate crisis that we're still living in. Choosing to step in and invest in stocks that are supposed to recover the fastest if COVID ends is, in my opinion, still too dangerous. So I recommend that you stay away from them still. In this video, we're going to talk about one of my favorite success sectors, e-commerce. I believed in it so much that I actually changed professions and became a product manager for an e-commerce company. This sector has a lot of growth opportunity, is barely tapped, but has become accelerated because of the crisis that we're in. So in this video, I hope to share with you some of my tips on what stocks to look at. Hopefully some of these names are not familiar to you so that you get some separate little bit of even if you are familiar with all the names, hopefully you get some ideas in terms of an investment strategy during this COVID period so everybody wins. If this is the type of content you've been looking for, please hit that like button for me and let's get started. E-commerce is great because you can literally buy anything off the internet. You can literally buy anything off the internet. Yet the adoption rate, based on the stats floating around the internet, is only around 20 to 25%. Why is that? Well, there's a common consumer behavior that you learn in business school, which is that if your product offers incremental improvement, unless the consumers that you're trying to target hates the products that they currently use today, it's very hard for them to switch over. Furthermore, if the product that you have to offer is really, really good, but your consumers do not hate their current experience, in this case, purchasing experience of being physically on site, the shopping experience that you have grown up with, right? If they don't hate that experience, it's very hard for them to switch over as well. So those, in my opinion, are two of the biggest driving factors of why the adoption of e-commerce isn't bigger. Consequently, because of this global disaster, a lot more people were forced into experiencing e-commerce and adopting it. And you can see this from some of the oldest e-commerce businesses out there. eBay, for example, has publicly announced that the GMV from last year is more than the GMV from last 7 years combined. And that is a case for pretty much all e-commerce businesses. They're all expanding incredibly. You can most certainly say with high probability that this is happening with e-learning and e-gaming, so on and so forth. This is why it's still worth investing in, because these are the industries where once you create adoption, just like it's hard for people to switch over, once they've switched over, it's hard for them to switch back. The amount of time that you're forced into this new behavior is more than 90 days. And psychology says that it takes 90 days for you to create a habit. You're forced into creating this habit. The new habit is actually a much better experience than the old one. And that's my hypothesis, by the way, but I think this is going to be true for most people. And therefore, this change in mentality will stick. And this growth will just get bigger and bigger and bigger as more and more consumers get comfortable with the idea of e-commerce. So how would you look at e-commerce as an investment opportunity? Well, ultimately I look at it as 3 buckets, right? You have businesses that are e-commerce, you have businesses that empower e-commerce, and then lastly you have businesses that deal with the physical logistics of e-commerce. You'll be able to find tons of companies under each bucket, all having their own merit. But in my opinion, what's worthwhile are the latter. Businesses that power e-commerce and businesses that deal with the physical logistics of e-commerce. Because choosing individual companies that are e-commerce, it's tougher, right? because you're basically betting on one horse as opposed to you betting on the stadium. The stadium, regardless of which horse wins, will always make money. With that context, what interests me? Well, there's plenty of companies that are already plenty established, so there's no explosive growth in the stock unless we're talking about fraud. What's interesting to me are predominantly two companies outside of the United States. JMIA was actually introduced to me by one of the 11ish collective members whom I brushed off because I thought it was high risk. The reason why I think it's high risk is because it has to do with e-commerce in Africa. Now, the beauty of this company is that it's creating e-commerce for each individual countries interested separately, but it's creating the synergy as a unit. And if you look at their numbers, I still think that this is pretty high risk. If this works out, I can't help but think that this will have the growth opportunity as C Limited. And C Limited is an e-commerce business, amongst other things, that's funded by Tencent, so it has super deep pockets, and is an e-commerce company for Southeast Asia. What do these two companies have in common? They're following the success stories from the Westerners, which I think is a very good business strategy. They're in developing countries, and they're ran by locals. That, in my opinion, is going to be a huge driver for countries that really, really value nationalism. So with their deep pockets, I think their chance of success is pretty high. I mean, C Limited is already making so much money, and there's still more room to grow. There's absolutely more room to grow. So C Limited and JMIA is some of my top e-commerce picks out there. I think Amazon still has room to grow as well, but it's less exciting, and there's more likelihood of people freaking out, especially now that Bezos has stepped down. That being said, I think there's still an investment opportunity on Alibaba if you are not afraid of what the government is doing with China today. Because either China or the United States blocks Baba as an investment, then your money is going to get effed. And I don't know, right? I can't speak to that. What I can speak to is Amazon has a lot of its business powered by AliExpress. So if Amazon wins, Alibaba wins as well. And just a slight tangent, I think Amazon's biggest problem today is not its growth opportunity. I think that it still has plenty. I think the biggest risk for Amazon today is the chance, the probability, a slight probability that it's going to get broken up by the US government. That is my fear. If you're looking for growth opportunity more around the logistics side, well, I recommended Plug a while ago before it was super cheap. I actually personally pulled out because I thought the risk was too high. Plug essentially is a company that deals with hydrogen fuel cell, more along the lines of B2B. And so if you're talking about delivery routes, this is a big deal, right? If they can revolutionize the infrastructure for delivery, there's a lot of money to be had. And once you build that infrastructure, it can't go away easily. And so that is a huge growth opportunity. The challenge, of course, is that if you think that battery technology will grow faster than the infrastructure can be built for fuel cells, then I will highly, highly recommend you don't invest in fuel cells. And frankly, that's the direction I'm seeing right now. Batteries are being charged faster. The capacity is getting bigger. And so from those perspectives, I personally would recommend you invest in companies like Panasonic or Samsung. They build batteries. And also, instead of choosing individual stocks, you can invest in battery ETFs as well. If you want to get super adventurous, I would recommend that you look into technology that empowers self-driving vehicles. Right now, my favorite is Velodyne. I'm actually going to create a separate video to talk about Velodyne because that's how excited I am for Velodyne. They have possibilities outside of self-driving cars. Stay tuned for that video. Regardless of which e-commerce wins, they're going to have to use a legitimate delivery service. You cannot invest in USPS. UPS and FedEx are established players that make a shit ton of money, and they have a lot of growth opportunity. I used to hate on FedEx, but frankly, their numbers are looking better and more interesting. But I'm a little bit too diversified, so I'm not going to make a move on that one. It's worth looking at, though. So that's kind of the beauty of investing on platforms and logistics, right? Because if you invest in anything more specific, then you have to babysit it things might go wrong if you don't. If the fad goes away or the fad suddenly shows up, you can either make a shit ton of money or lose a bunch of money overnight. And so I highly recommend that you look at it from more of a perspective of platforms and logistics. And so from that same angle, I actually think Shopify has a bigger potential for success because that drives small businesses, and there will always be risk takers and small business owners. The stock is a little bit overvalued for my taste, but that is a key player, truly. Similarly, if you're talking about e-commerce drivers, I think those Fiverr type of companies are interesting investments as well because they also help, people start their e-commerce business, right? So that's also interesting to look at. But just be very, very careful of their price to share ratio, price to earnings ratio, because we are in a very, very frothy market. But as we know, right, instinctively, we should know this. You either play the game and be very, very careful for the next 3 to 6 months, or don't play at all. That's really the only way you can deal with the stock market today. All right, guys, this is what I wanted to share with you guys today. If you have any questions or concerns, please leave a note. If you agree or disagree with me, I'd love to hear from you. And if you have any suggestions for the next video, leave me a comment as well. I'm actually building this tool on my website so that you guys can actually submit it and actually see everyone else's submission and upvote it so that we have more accountability for the videos I create. I'm really, really excited about this opportunity. I hope you guys like it as well. Thanks for watching, and I look forward to working with you next time. Thank you.